Hello, welcome to the European Open briefing for Monday, November the 13th. I'm Rafi Barajian, currency analyst at XM.com, and we're going to be having a look at the latest developments in the currency markets today. It is a quiet start to the week. The dollar is broadly firmer. We saw a bit of a rebound in the dollar on Friday following that sell-off on the concerns about the tax plans. Though the dollar is down against the yen this morning, the notable mover so far today is the British pound. It is down sharply amid renewed speculation about Theresa May's future as Prime Minister, plus, of course, the ongoing concerns about Brexit. The Australian dollar is looking very subdued as the yield differentials between US and Aussie continue to decline. Plus, we do have some political risks as well in Australia, and oil prices are flat, though they are holding near two-year highs. We are seeing increasing tensions in the Middle East, which are supporting prices, but we are also seeing higher output from some nations, such as the US and Russia, that's capping any further advances. Let's start though with the dollar first. We can see the dollar has been, well, it did bounce back early November before falling back again. We can see dollar yen currently trading around 113.50. The dollar index is around 94.50. Overall, dollar yen is still pretty much range bound in the longer term picture. We have that last week we saw the Senate publishing its version of the tax plan, and the House Republicans published their revised bill. We saw some disagreements. The Senate is proposing postponing the corporate tax cut by 1 year to 2019. That was the main factor that led the dollar lower last week. But another concern is that the House, even if the Republicans in the House were to back that delay in the corporate tax cut, they are very much against about the complete elimination of all state and local tax deductions, which the Senate is proposing. So that could be one of the major sticking points in reconciling the two bills. This week we will see further discussions on those bills, and it is hoped that both the Senate and the Republicans will vote on the revised bill before the Thanksgiving holidays in the US. We had some Fed speakers this morning. Philadelphia Fed President Patrick Harker, he was in Tokyo today. He said that he had lightly penciled in a December rate hike, and he expects 3 more in 2018. So now it's looking pretty much certain that we will see a December rate hike. Also tomorrow, all major central bankers will be meeting in Frankfurt at an ECB event. Janet Yellen, Fed Chair, ECB President Mario Draghi, BOJ Governor Kuroda, and BOE Governor Mark Carney, all of them will be speaking tomorrow. Of course, this could be one of Yellen's last major speeches before her term expires in February next year. So perhaps, given that her time is limited at the Fed, her comments might not make too much of an impact as before. Let's move on to the pound now. We can see sterling was boosted on Friday. We had much stronger than expected industrial output, manufacturing output, and trade data out of the UK on Friday for September. So that lifted the pound back about 1.32 against the dollar. It's back down against not just 132 but also 131 this morning. It was reported over the weekend that 40 Conservative MPs are ready to sign a letter of no confidence in Theresa May. And if they manage to get 8 more votes, 8 more MPs willing to sign that could trigger a leadership contest and potentially even a snap election later on. We already seen 2 cabinet members resigning in May's government, and now Boris Johnson, the Foreign Secretary, is also under pressure to quit. In the meantime, we had the 6th round of Brexit negotiations last week, concluding without much progress. The EU is apparently have given the UK 2 weeks to come up with a figure on how much they're willing to pay as part of the divorce bill. The UK is still not willing to do that. Brexit Secretary David Davis over the weekend said that the UK is not willing to give any number until the talks get on to the trade stage. So it is looking like a very rocky week for the pound. Moving on to the Australian and New Zealand dollars now, both currencies are very much subdued. The Aussie is moving back towards the 3.5 month lows we saw at the end of October of 0.7622 against the US dollar. There does seem to be strong support though around 0.7625. So if the Aussie was to break below that key support area, that could signal further downside. We are seeing the main reason why the Aussie is coming under pressure is because of the declining spread between US and Australian yields, as the Fed remains on course to raise rates further over the coming months, whereas the RBA looks like it's going to be on hold for the foreseeable future, with expectations of a rate hike in Australia being pushed back into 2019. Also, the Australian government is facing some trouble at the moment. More ministers could resign there over the dual citizenship scandal. We've already seen some ministers are already being forced to resign. We have got a number of by-elections coming up in Australia. So again, there's some political risks there weighing on the Aussie. Political risks were one of those things that, the main factor that had driven the Kiwi to 5 months lows. That sell-off looks to be overdone now. Although on last week, the RBNZ, they sounded a bit more hawkish than expected at their policy meeting. That boosted the Kiwi to 2-week highs. It has retreated from those highs at the moment, but overall the Kiwi is looking less bearish, given that some of those political risks concerns appear to have been exaggerated, and things in terms of the fundamentals, they remain very much strong in New Zealand. Quick look at oil prices now. We can see that 2-year high we saw at the beginning of November. US crude here in the chart. Currently, prices are trading around 56.68. Although they have retreated from those highs, we can see they're very much near those highs. But further gains look questionable, given the fact that technical indicators are suggesting that the commodity is overstretched. We've got upside pressure coming from increasing tensions in the Middle East. We're seeing worsening relations between Saudi Arabia and Iran. We had a terror incident at an oil pipeline in Bahrain. And we also had an earthquake in Iran and Iraq. All of these are potential threats to disrupt production, but weighing on prices, we have rising output in US and even in Russia. The US oil rig count last week rose by the fastest since June, so that's potentially could trigger some downside over the coming days. Quick look at today's economic calendar. We don't have much major data. We just had corporate goods prices out of Japan. The rest of the day is looking extremely quiet. That's it from me. Thank you very much for watching and have a great day.